There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Forex Factory is where we are, December 7th, which is all day here. We have Italian bank holiday, so let's party. In any case, the coming up Wednesday, we have some Canadian stuff. Currency's certainly been on the weak side. Do note that, along with Governor Lowe speaking a little bit later in the day as well. CPI, the big one on Friday. Keep this in mind. Transitory inflation, not so much. So, the address, I'm actually pulling up a picture I took of something yesterday I thought would be quite helpful for us. See if these are showing up on the screen. No, it's not. Yeah, maybe I'll have to load that up here. Bear with me a second. This was pretty interesting. So I'm actually going to start this off. Taking a look at Bitcoin. Let's go all the way to the bottom here. And I guess should be back out and do a little daily chartness here. Full screen, so you guys get the extended coinage discussion here today. And this is directly from one of my friends who's a pretty good trader in this. And this is mostly an order flow based review. Okay. So, and I quote, Bitcoin in a very bad week and a very bad month. If you bought this coin at the all-time highs, you're now down more than 25%. However, if you bought this at my $29,000 note from earlier in the year, you're up almost 90%. Not too shabby for an asset that costs 50 grand a piece. A lot of FinTwit, and this is just the Twitter crowd, is now bearish on crypto. And keep in mind, this was as of a day ago. They think that it's in its end. I think this is premature to say. I think it will not be easy to close below 45 to 47,000. I mean, we shot down below that, as you guys can see from the chart, but we had a huge bounce off that, which was a pretty big support level I've been talking about for a while. So this coming week will be a pivotal week for risk assets. I think probably this came before everybody sort of woke up today and said, hey, some of these COVID variants aren't that bad. Everything's off to the races again. So Bitcoin is trading at 48,000 to change. Again, this is a day ago. If 45.5 holds, I think we go back and retest 70 to 74K on this. If we have a daily close below 45.5, in my opinion, this opens up the gate to 32. So on this chart here, you can see where this 32 area is, dotted line, which I've sort of been calling for. So a much better chartist than myself on alt, or I should say anything in the alt space, primarily coins. Says remember, Bitcoin is supposed to be insurance against all this disruption by the Fed and inflation, disinflation, etc. Is it a cure-all? I don't know. But if you listen to the believers, in my opinion, Bitcoin will soon decouple from everything else and begin a long, steady march towards 74,000, maybe even beyond. So that in no way is a all clear to buy at this level. Personally, I think I'd rather take a shot at the BITO ETF if it gets back down to this level. And again, that's what I follow here. No real house. Just I have a lot of respect for ProShares, and that's their ETF. As you can see, the volumes they're okay. They're starting to pick up. So we've got probably about 8 million shares of this on average trading. I mean, obviously this is a big day because of the drop. No surprise, but yesterday we had 8 million trade. So far today we've got 3.2 million. So this is turning out to be a wicked liquid ETF. If you drop it on a 4-hour chart, you get a better feel for what's going on. So still a little bit fragmented as far as technical analysis. Not really a lot we could pull out of this, but I have a lot of people coming to me who are like, hey, what if, can I open up, XYZ Kraken account and, switching it from Tether to this to that and all the ridiculous fees to go out and buy this crap, right? This is a way to buy an ETF with a much lower cost in a regulated fashion inside a regular brokerage account. So it is an alt for you if you want to get into it. I just personally, again, could be wrong. I'd rather see it a third lower in price. That is my thoughts on the coinage. Let's move into broad markets. Way up, no surprise. Variants aren't going to kill us all in one day. So I think the market's like after the races. Nasdaq's posting a significant rise, but do note as I'm clicking on all of these charts that we're the highest among S&P in terms of the top of our sort of new mini bracket that we've been in here, with the top level of this being also the point of control from a volume standpoint. It's going to be very hard, I would think, to push higher than this. I would say that probably a good chance we go back down and test these lows at some point again. Once the fervor wears off, will this be a dead cat bounce? I don't know. But I think that's my feelings on any of these. Today we've got a shorts barbecue going on, so obviously it's buy the dips. Tomorrow it could be sell the rips. So just use that general macro thought process of mine over the next day or so. Quick peek daily chart wise at bonds, just so you can see where we are. Notice we touched the Bollinger Impact back. European equities, a real rip back up, and true barbecuing, in my opinion, right now. Stock 600. Let's go to the DXY. Daily chart again. I think that we're going to spend some time in this range. It's a range that's been defined by a long move and a real ceiling, if you will, we came up against, and then we crashed through it. And now I would imagine it's going to be the floor going forward. Unless something really crazy creeps up, I'm probably going to spend some time in this upper range. We haven't been here in a while. So it certainly argues for some auctioning to take place back and forth between this. Euro USD, same thing. I'll do note, if this is really going to apply to so if you look at the longer term on this weekly, I would think Pretty accurate. Actually, let me just go to this day. What is this? 14th of May. All right. That's about right. Looking at a longer term euro, just on a market profile chart back over on this weekly chart, this is a significant amount of volume, obviously over a long period of time. And we're right at the center point. There's a good chance this center point, which probably coincides quite well with that 94.50 to 95 area, that we could spend some time under it, because essentially it's the center point of all executions over the course of the last number of years. How much weight this carries because of this pandemic and the change in volume structure, as far as aggregated executions, I don't know. But I do think it's worth noting that we could spend some time underneath this 113 level. So the continued weakness, let's look at daily chart on the British pound. The continued weakness may, I'll tell you, for what it's worth, you would think that, this is mostly variant weakness, right? Bad variant's going to kill us all. Market goes down, just, less of a, but we've started a little bit of a climb back up on a daily chart in the DXY. So I would expect us to probably go back up and test this high at some point. Short term, I'd be thinking that, which just means essentially for both of these other majors I like to always show next, we have lower lows. I've talked a lot about the different levels in the past, this being the big one here, this one spot 32 area. I would expect that we've already touched it now 4 times on a daily chart. Good chance if we went below and the dollar rallied all the way back up even higher, which I just don't see happening this week, but who knows? Stranger things, that the fact that they sort of the major risk factor is mostly off the table as far as COVID really means that we can continue to do some more sideways trade and build bases in a lot of this stuff. So that argues for taking trades on both sides. Actually, before I get into this, let's see what's going on in energy. At a loss, where is it? Move my charts around now, I can't find anything. And delete that off the chart. Yeah, I tell you, sometimes this is a great example why I prefer just looking at FinViz comparison on these futures markets from a all daily chart perspective. I just like seeing stuff together. It's like a dashboard of awesomeness, right? So this is, if anybody's new to what's been going on, I guess the markets have gotten some hints of too much of a run, obviously, and then this is the Delta variants that were going to kill us. Threats, energy space sold off a bunch, and now we're rallying, obviously, back from what was damn near a $10 sell-off, at least as far as Brent's concerned. But we've had a pretty decent rally back. Interesting to see nat gas, though, has not. Our canary in the coal mine here. Sideways movements in the metal space. What's going on with nat gas? I haven't paid attention to the news. I think we've been starting to see a rally here with the winter heating up. Heating oil hasn't even taken off like it usually does. Usually these are just sky high right now, just because of winter. Usually get a stronger demand for this type of stuff. But there's a lot of charts that are decoupled, so it's not like we can sit here and read tea leaves on this stuff. I'll put the gold futures or the oil futures market CL crudes back on the system again. All right, so we're starting sideways trade back inside the sideways trade. This little ceiling of resistance up here at this one spot 28.30ish areas continues to keep us moving higher. A little more of an interesting move here because of that. Maybe this has something to do with some of the Canadian central bank discussions coming up this week, but I think I'll just have to plead the fifth on this one because it just really doesn't make any sense right there. US dollar JPY. This should be expected. I would imagine this along with the New Zealand stuff down here. Yeah, so the rallies in NZD land probably significant because of the fact that we're not all going to die in a day. There's probably a pretty good chance that this area is a solid support that starts to register with a new squeeze zone under here. Probably see it show up. So again, essentially buying the dips as we rip, potentially go back up into a more normalized zone, trending sideways, continuing to build trade out as far as auctioning higher or lower as I'll be expected. Look like Armageddon down here, but as usual, the World Health Organizations and the media have got it wrong on this whole COVID thing. As I've been saying for a long time, don't trust anybody until we get a full data set out on whatever everybody's claiming to know everything about, because we were wrong as a group. GBP/NZD, let's make sure we're daily back inside the fray. Real tight fray going on here as far as sideways trades between the Swiss and the yen. GBP CAD, let's take a look at that. Significant movement here. How is, let me just jump to weekly. I would say if we see a daily close below this level here, this one spot 67.30ish area, man, I don't even have any targets lower. Reset this. Jeez. It's almost like we need to just stretch it out this way better yet, right? Phew. I tell you, for what it's worth, I hope Neo's got a really good handle on this real solid support level. And if this goes, it just looks to me like we could just sail down. Um, a ton of pips. Don't know if we get a daily close below this whole area right here, this whole 67.30-ish area. I don't know that I'd ever want to be along this for a while. Looks like we have some running to do. Hope that software's got this in mind. I have not taken a look at any of the comments that Fernando's made or any of his, but this is definitely one of those times where hopefully somebody's asked the question of, how does this handle a potential multi-year break of a super solid support level? I mean, you can almost bank on this level. If we break it and hold below it, and who knows, you could even make the argument we got to spend a week below it to form a candle underneath this area. Then it just seems to me like we're going to want to test a lot lower. I would not want to be trying to get long this in any fashion or accepting any trades long if we close under this. The key is we got to close under it, right? Right now they're just teasing us, but as soon as we close under it, you argue that maybe take a couple of days to close under it, but I just, as soon as I see anything print lower than this and close under this level, I just don't want to be long, period. I don't care if I'm wrong. I would accept any short trades on rips, by the way, folks, but I don't know that I'd be long. Let's just hope Neo Neo maybe pauses. If necessary, just get out of mode 2, right? Or just turn mode 2 off and just run mode 1, which is the very conservative mode. All right. A tepid situation on Neo. Sorry, I was reading through a bunch of emails I got coming in. It's fast and furious these days, trying to get registered in like all 50 states with the agency governments in each state here, and a lot of them are just posing a lot of problems for us and making us set up all these stupid DBAs that have some sort of agency name in there, which is ridiculous, right? Welcome to setting up a large insurance agency, right? All right, what else? Gold. Take a look at spot. Actually, forget about the ETF. This has surprised a lot of people because there's a fair amount of really smart guys I follow. Like, I've probably told you guys about David McKnight and a couple others I follow on Twitter. And David's actually been talking a lot about this is going to rally, but patience, patience, patience. I just don't see it. It just seems like there's just too much liquidation going on. And it is almost like the impatient folk in institutional land are just selling this thing off in front of 1900. It's been a real formidable resistance zone up there. So it tells me that if we can get up there and maybe close a daily candle above 1900, that it's just going to absolutely probably rip. And it's going to see interesting where it can, if it can get above that area. Just picture the longer we move, especially into a protracted or coiled situation, especially on the weekly. The longer we spend time in this slight zigzag or auctioning or whatever you want to call the sideways trade, the bigger the pockets of stops are that build up in these areas, right? I've talked a lot about this with the DXY as an example, and sure enough, as soon as it ripped above that level, it went straight through all those stops and blasted right up a full dollar, hell, a full $2 into the 96.50 area, right? So we could be seeing the same thing in a different manifest playing out in this metal. So if you do trade this in any form, futures, land, or anything MT4 based, just know that. All right, so we covered the indices, covered commodity, we covered metal, the Bitcoiner. What else? Been going on there. Here. Big reversal here. No surprise. The Canadian energy space is back in action. Love is building again for Australian dollar. This one's the one to watch, though, guys. This whole neo currency. Spread the word. Hey, what else? I think that's everything I wanted to cover. Yeah, let's leave it at that. All right, folks. Everybody have a great week. I will see everybody on Saturday. Always bring your questions up if you have any. You guys want to see anything outside of the box. And just keep in mind, the biggest thing you guys can do for your up and down line is to squawk about everything I'm talking about. And at the very least, make sure everybody watches these replays, which is typically up within about 4 or 5 hours of me getting finished. May the trades be with you.